it's Heather Roy here with Anderson Realty, and today we are talking with Delaney Bravo from Jet Home Loans. Thank you so much for joining us.
Thank you for having me. I'm so excited, and we have a pretty awesome topic that is very current.
Yes, mortgage forbearance. We're going to speak about that and just learn as much as we can about the forbearance and everything going on with COVID.
Yes, so people are getting these letters in the mail, coming to their mailboxes, coming to your inbox saying, you know, defer your payments, skip 6 payments, skip this, put your mortgage in forbearance. But people don't really realize what that means and what implications that could have for the future of their mortgage. Right. So mortgage forbearance, really, you need to read the fine print and you need to call your lender, because in many cases, they might have a 6-month forbearance. All that means is that they are not charging late fees for 6 months, and on month 6, they want all 6 months worth of payments right there. People think they just add it to the back of your loan. That's not exactly how it works, and you just want to make sure you're protecting yourself.
Right.
With that. So I know you've probably had some buyers ask, what is forbearance? How does it work? But it's really all about working with your lender and knowing what those fine print items are.
Yes. So some of my buyers got letters in the mail about they could add their payments to the end of their loan. Tell me a little bit about that.
So when it comes to adding let's do the 6-month example. So you say, I need to skip payments for 6 months. I got laid off because of COVID. Well, month 6 comes around and they want 18 grand. And you're like, I don't have 18 grand, and I didn't understand it. I thought it was going to the back of my loan. This is where they will offer you that option. That is not how forbearance works. So when the option comes and they say, oh, you don't have the 18 grand, we'll add it to the back of your loan. That is called a loan modification. You are modifying the terms of your loan. You are being charged interest on that, and it will read on your credit report as loan modified, which can affect how creditors look at you in the future, because why did you have to modify your loan? Why couldn't you pay it on the terms you went under when you signed for the loan? But it's all because the information is not readily available like we're doing today.
What about refinancing? I've been told it could affect your chances of refinancing if you have that modification on there.
I've had 5 people in the last month that thought they were doing the forbearance, and it literally says account in forbearance, and it shows your past due. And it just doesn't charge you late fees. And that's not how these people are understanding what they're doing. They're finding it as a break. But I cannot refinance a buyer who's past due on their mortgage, even if that's not what they understood was happening. So I'm really happy you asked me to stop by today to talk about it. So yes, it can. It 100% can.
All right, well, thanks for joining us today. And if you would like to subscribe, just click on the link below. Thanks.
Hi guys.